Yo, what's up, everybody? Damn, I was trying to start the live stream, and for whatever reason, Streamlabs like apparently had an update. I guess didn't really fix anything, but it just scattered everything in different places. What a weird situation. And of course, it has to happen right when I'm about to go live, right? Wait a minute. Uh, get that echo out of here. But yeah, how's everybody doing? Hopefully, everyone's doing well. We got a pretty busy next couple days here on YouTube. I'm gonna be hanging out with y'all. But yeah, so these calls are going to be live trading calls, obviously. Hold up. Oh my god, saw my daughter yesterday and she was sick, so I think I'm getting sick now. Hopefully not. Hopefully not. Right. But we'll see. So yeah, these are our live trading calls we're gonna do today, tomorrow, and the next day. Normally, I'm with just with my private group when I do these for like the whole week. But I just figured I'll get back to those of you that support me here on YouTube. Good morning, Tony. Good morning, Maddie. Maddie's in my private group. But yeah, so we'll see what happens. If you guys watched my Sunday call, hopefully you guys took some stuff from that. Let's take a glance at all these different assets. Let me know how you guys could see things. Can you guys hear me okay? Is everything rocking and rolling? Just let me know. I don't want to get through the whole call and there's issues, right? So hopefully everything is okay. Just throw one in the chat if everything's good. And if there's any like letters or writing on the chart that you can't read, just point it out to me and then I can clarify but hopefully you guys could see everything. Hopefully all this stuff is okay. Okay, everything's good. Okay. All right, so when we're taking a look at the dollar here, again, price ran up. We're still flirting with this lower portion of the breaker. So, price tagged it, started pushing lower. It's been really, really wicky back and forth, okay? So there's a lot going on with the dollar, just in the world in general, right? So if you look at this, we got above this candle here. I think we have that marked off. Yeah, we got that wick. It's also a bullish order block. This order block being taken by this one, if it refuses to break the midpoint of this, so refuses to break this low, any retracement should treat this as a potential propulsion block, which is an order block with an order block that goes inside of it, right? So the previous one gets traded into with this and closed inside, or at least at the open. So breaking up above this with energetic price delivery, when it comes back down into it, the midpoint is the line in the sand. You take that weekly or this monthly perspective here and you drag that over to this, and that puts you about at this low. I would say this low is somewhat protected, right? It's got a stop run. We got that wick being respected. It's respecting the fair value gap. We have sell side, buy side. So this is a balanced price range. We got price then displacing away. Price comes back into it. We got that wick in here. Look at the bodies of the candles. We love to see that. Okay, we love to see that. So that's showing clear respect. And unless this gets overtaken and then inverts that fair value gap, there's really no interest to try and see price go down into that. If we look at the bonds, right, if the bonds continue to rally, right, say this declines, but then gets back above some of these levels, If it takes this open price here, that'll be our solidified change in state. Also confirming the inversion suspension block here. The suspension block, yeah, it's on the 2-day chart. So if this high gets taken as well, then this high to that low will have then created a failure swing. If we got that failure swing that then takes out this high then automatically becomes a target. That is what I call a type 2 dealing range, or what ICT calls a type 2 dealing range. And generally that, you know, that'll then push price from a bearish move to a bullish move. And then we could potentially target this up here, so on and so forth. Okay, so if we pull this to the weekly chart real quick at a bigger view, remember the bonds, which is this, the T-notes or T-bond futures, they are significant because the indices and the foreign currencies are positively influenced by what this does, right? So yeah, hopefully that makes sense. We talk about this every week because it's pre-market open, because there's no news. Our engagements are going to be pushed after the 6:30. But if you guys have any questions, you know what I mean. I'm more than happy to help you guys solidify whatever questions you have. It's pretty much the reason why I'm going to go live a lot this week, to try to get all of you guys up to speed. Those of you that may be new, or those of you that have been with me, support me on YouTube, but just aren't able to join the private group for whatever reason. And I think after these 3 days, you guys are going to be able to take leaps in your understanding if you apply yourself. So again, we got the yields as well, right? If we're going to see the dollar go lower, right? If it is going to go lower, if it overtakes this fair value gap and trades back into it, to be able to trust that this inversion is going to hold, we need to see the yields also declining. Okay, so if we can get the yields declining plus that overtaking of this fair value gap, you know, that'll be an early sign that price is potentially going to want to go lower. And then that may send the indices and foreign currencies in a lot stronger buy side delivery, because then market symmetry will be in place. But we're in a moment where we're ahead of CPI. CPI is tomorrow. Yeah. So we're pre CPI. So day before, day of, day after CPI, because sometimes it'd be a bit hectic. So we're going to be keeping that in mind. Okay, let me see the question. The DXY impacts indices in an inverse. Yes. While the bonds and yields have more of a positive. So the bonds and yields are not the same. The bonds themselves, which is this market, influences what the indices do and the foreign currencies. And it's reverse correlated to the dollar. The yields are positively correlated to the dollar. So they do the inverse of the other assets I just mentioned. Again, here's the symbols, by the way. These upper 6, these are the proper symbols to get to the proper asset, right? So again, these 3 impact the indices and foreign currencies in a positive correlation or influence, and these 3 impact the dollar. Okay? And then inverse for the other assets. And again, if it's cracked in correlation, if you can't really see a correlation going on with those 3, that's telling you key information. Right? It's telling you that, first of all, there's a crack in correlation overall. So the market could be a little bit more chaotic. But it's also telling you, say, the bonds are going lower, but the indices are rallying higher, and say the dollar is also going higher. Well, that's showing you that the indices are overwhelmingly bullish. So you shouldn't be trying to pick a top, right? It is more risky because at any moment they could flip the switch and then all of a sudden correlation comes into play. That's where the higher risk environment comes into play. Okay. So again, there's no news. We do not trade pre-market open when there's no news. Because there's no news, we wait till 6:30 a.m. Pacific Standard Time. Whenever we look for an execution today, it's going to be near a macro. Okay. ICT has explicitly talked about how when there's no news, you can trade pre-market, but again, it's best to use that market open as your potential manipulation gauge, right? To be able to see manipulation. And then many times at 7 a.m., you'll get a reversal. Obviously depending on if we hit a PD array or take liquidity. But again, 7 a.m. is in a macro, which is 10 a.m. Pacific, 10 a.m. Eastern. Okay. So given that it's in a macro, given that we wait till the 6:30 when there's no news, hopefully you guys understand why you should wait. And you don't have to take this advice. You don't have to. You could obviously do whatever you want, but you want to do things that are taught, right? If you want these concepts to be effective, you have to understand when things are going to be a little bit more out of your favor or have the chance of being a little bit more out of your favor, and then act accordingly. And I'm sure if you go back and look at some of the trades you've taken, especially near news events, if you don't wait, right, or if you take it too early, or if there's no news at all and you traded pre-market open, you probably got your, you got your ass handed to you multiple times, year after year, day after day, month after month, right? And so little simple fixes like, okay, I'm just not going to take a trade in pre-market open if there's no news, or if there's news at 6:30, I'm not going to take a trade pre-market open. I'm going to wait till that news comes out. And then the macro after that news comes out, that's where I'll keep my attention. And when there's no news, focus on the macros. Let the 6:30 be your potential manipulation, AM Pacific Standard Time. Okay? Observe that potential power 3 characteristic that happens specifically at and specifically using that 6:30 open price. I have an indicator that literally has put this on visual display. So we'll kind of look at that in a little bit. But without an indicator, it doesn't matter if you have one or don't have one. Just keep in mind that the 6:30 open, many times you'll see power 3 taking place, right? Just simply in that AM session time period, let alone the larger time period, right, of the daily power 3, right? So just keep these things in mind, right? That's why we're not going to engage before 6:30. Again, will we make an argument for a move? Probably. There's always something to do. We always find a setup all the time. It's just not something that aligns with my rules. And I am disciplined. I'm not going to break my rules just to take a trade. And you shouldn't either. But you want to keep these things into consideration, okay? Because again, you have to know when to trade, when not to trade, when it's high probability, when it's not. And part of that has to do with understanding these time elements, and then navigating when there's no news, right? Where's your manipulation, right? I get that question all the time too. How do I identify manipulation? Well, first of all, it's very time-based. You have to wait for a particular time, okay, for things to unfold. Close to 6:30, right? For the daily range, it's the London generally happens, or the manipulation generally happens in London, right? If London is slow, the manipulation will probably happen and set the high or the low of the day, depending on what the bias is, in AM session, especially if there's news in the AM session. And we've come off of a slow overnight session or a slow Asia, slow Asia and London, right? That promotes New York session setting the high or the low of the day. And that'll be when the manipulation happens. Okay, so again, stuff is very important. You can't just go in there and look for order blocks and fair value gaps and think you're going to be successful. It's just not it's not how it works, right? There's more to it. And you guys that have been with me for a while, right? You know that we talk about these things all the time, and it has become hopefully blatantly obvious that that's the case. Okay, so again, we're going to wait till 6:30. Looking at this DXY chart, again, we're really flirting with this upper wick level in here. We do see that it is showing respect to that. We've gotten a very dynamic response off that 75% of it, and we've came all the way back down. So we got to pay attention. Let me actually make this one smaller. So we got to pay attention to this gap in here. Actually put this right there, take it off of here, make it less busy. Make this a little less loud too. Okay. So like I talked about 3 weeks ago, 2 weeks ago, this reclaim bullish fair value gap, which was a previous inverse to go lower, it's now a reclaim bullish fair value gap. We see that it respected it as we said it probably should. Came up and we finished off some of this gap like we said it would. Well down here, or way down here, we talked about that, and it came all the way up there. And now that prices ran up like this, right? We have high resistance liquidity up here. Why is that high resistance? Because it's a stop run already, and it's consolidation. So it took stops. So work has been done above those highs. Okay, so if it's going to go up, this is an expectation that we'd like to see. If we'd like to see it trade into that, not fly through it, but if this is going to be what I call deferred liquidity, which I've been talking about to you guys for a while now, price is going to trade into that, give some type of retracement. A lot of times it's aggressive. Many times there's a low that gets swept before it looks to go. So it goes down, tries to go up again, gets people thinking this is strong resistance, and then it punches lower a little bit further, tagging some PD array or just simply taking out a low that was formed. And if they're going to go higher, that's engineering liquidity. That's engineering a counterparty to their smart money buys if it's going to be bullish. Now, if this fair value gap gets violated and it inverts and we see the yields start to decline even further and the bonds pick up with a rally that ends up taking this high, or at least gets up near that high, then we'll see the DXY reliably break down. And if it breaks down and takes this low, that puts this in jeopardy. And then we may look to start making our way towards these relative equal lows. Okay. You see this quarterly suspension block. We'll use that when the time comes. We've used it all through this. We've used this actually for like almost 2 years now. The same PD array, the same levels, the same quadrants, and they've been reactive every single time it's touched it. So, things can get reused over and over and over and over again, especially when you're thinking about higher time frames. Okay. But again, if this holds in here, say it trades into it, preferably we see this lower 25% not get tagged into. If it can leave that available, that'd be great, because then that'll be showing an underlying strength, and this deferred liquidity will become more and more apparent, especially if it leaves that open. But again, we're going to watch this, right? We have to see what's taking place going into 6:30, see how it treats that. If it just tanks, we do have relative equal lows here on the 4-hour. So if it tanks, comes back in, respects it, and then we start to gravitate lower, we could see this as a market maker sell model. Otherwise, if it fails and leaves that open, like I said, we'll see price get up, into this upper level. We are range bound for the dollar. It's sideways on this upper time frame. So on a monthly perspective, we are in a giant consolidation. So again, you have to be allowed to be flexible. You have to know what you're looking for, which again, we have pretty much laid that out. Depending on whether this fair value gap holds or not, that's going to determine whether we're going to try and attempt these highs again, or if it's going to break down and then start to target these relative equal lows, and then maybe even try to get down into here if it does take that out. This range in here, we got the high extreme to the low extreme. That in itself is a dealing range. That's a balanced price range. We have a stop run here. Well, stop run here, right? It took that low out. So if we were to measure out the current range that we're trading within and get an accurate premium and discount that's more close to price, you use the most recent stop run that then also took buy side liquidity too. So sell side's taken, buy side's taken. So equilibrium is right here inside this PD array. That's a discount array. We have a larger parent range, obviously. But this right here, if we're going to look to go higher, this is enough for us to observe and try to study if it's going to get up there. Okay. And again, we have to monitor what this is going to continue to do. Okay. So going into 6:30 for the dollar, this is what we're going to be paying attention to. Okay, this fair value gap in here is going to be significant. And again, if it leaves that lower 25% available, okay, let's pull it down a little bit. So if it just tags this and then we displace and change state of delivery after we've taken the stops here, again, we'll start to march up into this level. And then as it breaks through the quadrants here on this monthly wick, that's what that is right there, right? Showed you guys a second ago. As it breaks through that, we'll be able to use those quadrants. And then once it takes out that wick there, we'll then adjust the wick measurement, put it onto this. I mean, you could keep it here because this is the bigger one. Yeah, let's actually go with that. Let's go with using the monthly wick. Take that off. We're in that upper 75% as well of this larger range from this low up to that high extreme. But again, that's the larger range. And if we stay in that upper 75%, it's going to be just another confluence. If it keeps this available, this lower portion, and then we start to get a real strong run through this low to that high, this breakdown, if it's bearish, any return into that should act as resistance and go lower, right? So these are characteristics that we got to keep tabs on as price is printing to justify and frame out a narrative or build a narrative, okay? So yeah, those are some things we're going to keep in mind. Okay, we are up above this, so keep that in mind as well. Again, this returning into this, respecting the fair value gap, would also be supported if it was to displace by this monthly bullish order block. Okay, so you can see how things from time frame to time frame start to overlap one another. All right. Okay, let me actually pull that over there. Okay, so this as well, if it comes down into that fair value gap, say it closes it in entirely, and then immediately starts to rapidly go higher, and then, again, overtakes this once more, gets above, this weekly perspective will then have showed us a immediate rebalance, which is a highly bullish signature in this bullish capacity. Same thing's true if it's bearish and it does that, right? And it closes it in completely like a fair value gap. Say this goes up, tags it, and then immediately responds lower. That's an immediate rebalance, and it's heavy evidence that price is going to keep going lower. So we'll keep that in mind here for this weekly perspective. And again, you got to be flexible because we're in this big ass range. So if it just breaks down and then comes back up and then breaks down again and comes back up and just doesn't want to go anywhere, then again, we're in a range. So that can be expected. And it just tells you to lower your risk, right? And be more demanding in price. So these are some things that we're watching for the dollar. So hopefully that makes sense to you guys. Again, let me know if you guys have any questions. If you guys do get value from the video, don't forget to like the video, share the video, subscribe to the channel if you haven't already. We do this constantly every single week for the last 2.5 years, or last almost 2 years here on YouTube. So, I think you guys get a ton of value. I make sure of it from these calls, especially on Sundays. And you can always ask questions if you have any issues or if something I'm talking about doesn't make sense. I encourage you to do so. That's why you're here, right? So yeah. So now we move over here to the currencies. If the dollar does choose to go lower, we'll see this react the way that it is, right? I do see that we have now left an SMT. The British pound has failed to take out that low. Did it? Let me see. Yeah, just by a little bit. That is liquidity down there. But again, this wick we talked about on Sunday, I wanted to see if we could stay in that lower 25% to really promote bearishness on a heavy capacity. But again, if we can't get that, then we're not going to be demanding, right? We do see that there's potentially justification for the dollar to go lower if certain things align and certain levels are broken through. So it's the same thing here, right? If this decides to get above this level here, then we should be able to see a run above. Then anytime price comes back into that upper 25 to 50%, we should be able to see it continue to rapidly run through to the buy side. We do got equal highs here. Okay. So these equal highs on the euro or on the GBP are pretty interesting. We did have buy side, sell side. So again, this should act as a BPR if it's going to go bearish. Once it starts violating that level, I mean, you could take this high extreme to that low extreme, get midpoint. If once it gets above midpoint, that's enough for you to justify that this is going to be taken out, especially with the failure swing SMT plus the change in state that'll occur once it breaks this high. We got our stutter candle and then the displacement. If we displace above that, that right there becomes your change in state. If this was 3 candles and that stutter candle was there prior to that, potentially even taking stops before it turns, that would still be a change in state, right? The stutter candle, I've learned over time, really highlights where the actual change in state is. I'm not sure if it has to do with because this is the last time it bought prior to the down movement, right? Or vice versa, right? The last time it sold prior to the up movement, right prior to those consecutive candles. I'm not sure, but the functionality when it comes to change in state, that's something that I haven't seen people talk about, but it's something I've observed over the last almost 7 years. And it's you go back into your charts and you'll see anytime it changes state, this is pretty much in alignment, right? That little stutter candle. And when you put a line there, it's very sensitive, right? Just one of those things that I discovered when it comes to the change in state characteristics, but I haven't heard many people talk about it. But my back testing shows validity in it. So yeah, keep that in mind. So again, we got fair value gap. We got a bullish fair value gap here that's being reused. If it gets above that, plus above this level, this is a very well balanced piece of price delivery in here. And then any return into that, especially if it returns into it and displaces above this high, we will be set to then try to target buy side. And as a result, we should then see this go lower, the yields go lower, and then the bonds, should go higher as well. Otherwise, rejection here, we're retracing. So we got to see some type of change in state of delivery to get us in line with the move. We don't know if it's going to stop, right? They could keep going up. We got trendline liquidity here, equal highs. Dollar, if it shows weakness, we may see this turn into a market maker buy model. It's off the heels of SMT on the higher time frame, off the heels of us inverting levels at that point that should hold as bearishness, right? So you'd have to adjust. But for now, we're going to stick to the idea until the dollar fails and breaks this fair value gap. We're going to stick to the idea that this may go lower into this, respect that upper 25 to respect that 50% up to the 25%. If it wicks down a little deeper, that's fine. But on a closing basis, we don't want to see it close below that midpoint. We definitely don't want to see it close below that 75%. And then if it overtakes it entirely, again, we got to sit on our hands and wait to kind of see the reaction, because that's going to have an impact on these assets. So that's kind of what I'm identifying here on the currencies. So we'll see how that goes. Oh yeah, I didn't miss nothing. We did talk about this market maker sell model. That's only going to be continuously justified if we can get this to respect these levels. If not, then again, we're going to see price potentially shift into a market maker buy model. We have a small one here targeting this high or even this high. But if we take out this high or change state above, well, once we get above these, that's practically a change in state as well, especially if it returns and goes, creating a type 2 dealing range. But once it gets above these levels in here, we could then potentially see this as a bigger market maker buy model, especially if the dollar gets real excited and goes lower. And then that'll be a failed market maker sell model. not only the bigger one, but we'll also have this as a failed sell model as well. Because you guys remember, we talked about this as a market maker sell model too. This low to that high also presented a small fractal market maker sell model. This low to that high, once it targeted that low, was also a market maker sell model. This run lower, going higher, right off that low, ended up becoming a failed market maker buy model. So once it broke down, creating a failed buy model, that made this sell model easy to observe, which again, we did that real time, uh, actively, or I'm not just talking about it in hindsight. We've navigated this whole entire market for years at this point, publicly and privately. So yeah, and we got the monthly open price here. It is the 9th of June. So, we do got accumulation, manipulation above the open price distribution. So if this open price also gets overtaken, this will end up becoming the manipulation instead of this. And then again, we'll see even further buy side delivery. We are in the summer months. You have to understand that, the summer months has a seasonal influence of being a little bit tricky to engage. Okay. For all assets. All right. Just because smart money's on the sideline, most, you know, big billionaires or rich traders are on vacation probably for the most part. Volume many times dies down. But we may, given all the things happening in the world right now, we may see that get sidestepped, which, kind of seems like that's the case. We've had some pretty dynamic price delivery, but we'll see, right? We'll see what happens. So I'm going to keep this labeling here until we are fully justified. We are inverting this fair value gap, so we got to keep tabs on that. Right? That could be early signs that we're going to keep going. So, those are some things that we'll keep in mind for the currencies. Okay. So hopefully that makes sense. So if we scrub over here to the indices, we see that this huge decline offered only sell side delivery when it broke through this gap in here. That was the new week opening gap, which is a daily volume imbalance on the daily chart. We had SMT at the highs up here. Price had a large wick and then displacement. So that in itself, if it's bearish, should be a balanced price range. But this as well, right? The decline into here, leaving these equal lows, it's fully justified for them to want to come back and offer buy side in here. But if it was truly going to be bearish, right, we should see very strong response, at least from this low. If it breaks the midpoint here, we're going to go higher. It's undeniable that these lows will be left. Did we have SMT? No, we just set equal lows. So yeah, it's fully justified after this huge decline for the start of the week. As I said, it potentially could do to run up into this sell side a little bit, offer more buy side. I wasn't sure if we would be able to get up into here, but it makes sense, right? That it would get all the way up here because there's only sell side offered. We had the bearish breaker here. I wanted to see if we could stay in that lower portion, but again, there's an imbalanced piece of price delivery in this upside movement to downside movement that justifies us pulling aggressively against this bearish breaker here. So because we're above that bearish breaker, we got to be on pause a little bit for the shorts, right? And again, it's fully justified for them to have run up here because sell side was offered in that gap, but buy side was not offered. So even though this is a breaker, we see that it somewhat failed to deliver from that lower portion because it's not fully balanced yet. Breakers are supposed to create balanced price ranges. Order blocks too, right? They have a signature of BPR behavior as well. Inverted fair value gaps have that signature as well of being balanced because it's got buy side, then sell side. Then when it returns into it, it should respect it and then continue going lower if it's bearish or vice versa, right? So when prices now come all the way up here, if it was sincerely going to try to target these equal lows here, we would preferably want to see it respect that. We do have one last layer of defense here for it to try to go lower, which is this fair value gap, which has buy side, sell side. This should be balanced. So that a small lower portion we can see in here. Okay. Small itty bitty piece of price delivery. That is as far as I would like it to go if it's going to go lower. Because if you take this high to that low, we're also running to a premium as well. So as long as it continues this and is very sensitive to this, and we could break down from this level, we should be good to keep going lower. But the line in the sand overall is going to be all of this stuff being overtaken. This new week opening gap or volume imbalance on this daily chart is now a balanced piece of price delivery, right? We have sell side only offered and now buy side's been offered. So now it's a balanced price range. If it's going to go higher, it should be sensitive to that level. We shouldn't see this low get violated if it does end up going bullish. But again, this is such a rapid move. We have so much going on. You got to be cautious. And again, when there's no news, wait for the news to come out, which is what we're going to do today. So does the logic that I just described make this make sense as far as why it came back into here and why it's justified to have done so? It's not random. It's not like, oh, it's just reaching for that level just because it wants to reach for it, right? It's because it was imbalanced. It's a volume imbalance that only had sell side delivered, right? Off of a huge run. Big ranges a lot of times want to come back and retrace. It's left a lot of imbalance, a lot of inefficiency in price. This upper level in here, in this fair value gap, again, has sell side, buy side delivery. And then now it has a deeper sell side that broke that low. So if it's bearish, there's no justifiable reason for it to want to come through, especially through this level. Preferably it tags this high, stops out anyone that was in profit from yesterday, or maybe trying to get into the shorts. Use it as counterparty to then try to come and offset that by targeting the lows down here, right? And the gap that we labeled on Sunday. Okay. So again, I hope this logic makes sense, right? Because people see big moves and they don't know why it's doing so. What I just described is narrative. Okay, that narrative helps you justify a bias. What is bias? Are we bullish or bearish right now? Okay, as a result of the narrative. If you just have, oh, it's going to go higher just because it's going higher, you're missing that narrative element. Narrative is the where and why, right? And how, right? And what direction that's headed in as a result of the where, why, and how. That ends up becoming your bias. Bias can fluctuate on a day-to-day basis because there's displacement, consolidation, and retracement, right? Inside of a larger perspective. And narrative, right, is the overall reason why that bias should be trusted. But again, narrative doesn't always change dramatically. You could have the same narrative from the higher time frame for weeks, right? Because it's in mode to do something, right? It's setting up a particular thing. It's doing particular things to set up a particular run, right? And then once you determine what that is, there's your bias. You can't just have bias without narrative, though. You have to understand what the storyline is that justifies that bias. And that's the hard part, okay? That's why you fail or struggle with bias constantly. Those of you that struggle. And that's why we're correct a lot of the time, is because we understand narrative. And I paint the picture every weekend, let alone every day in my private group, live, walking through the narrative, lower time frame narrative and bias, higher time frame narrative and bias on a regular everyday basis. And if I'm lying, I have private group students in the chat right now, like Maddie, who I encourage to come out and call me a liar if I'm lying. But I know I'm not. So it's not going to happen. Right. So again, hopefully I was able to make this make sense to you, right? Anything that goes up to go lower can be considered a sell model. Anything that goes lower to go higher can be considered a buy model. Anything that has buy side and sell side or just a lot of trading and then it leaves that range, that's a balanced price range. If we got sell side, especially if it takes stops, and then buy side that takes stops, that range in there should not be expected to be traded into. You can also see that that would be an order block as well. You can also see that it'd be a breaker as well. So can you see how breakers and order blocks are balanced price ranges? Because they're offering both sides and then they leave. And then when they return, it should be sensitive because it's balanced. And then price should take off. And if that phenomenon doesn't happen, right, and if you see, price does this, that, comes back down, and then breaks through equilibrium or midpoint, then price may look to go the other way, right? Create a sell model. This is a buy model, okay? And then once a buy model or a sell model is completed, right? Say like this went up and broke down, right? I mean, it could go up there like this, but once it was to get down below this low here, if it returns into the lower portion of that range, especially if this is a previous rejection block, the rejection block becomes inverted at that point. And it's also a balanced price range. Why? Because we got buy side and sell side delivery. And then it leaves that range. Okay. And then once it starts trading deeper into that again, it may not be as reliable. So then you have to adjust. So you can see how this understanding helps you really get closer to the market and understand price delivery. And when price is going to continue, right? What characteristics should show up, and when they're going to fail, how you should behave and start to think. This phenomenon is fractal. This happens on the 1 minute, 30 second, 5 second, 1 hour. So the same phenomenon is happening inside this larger narrative, just on the lower time frame. Okay, like if we took away the daily time frame up here and saw this as a 1 minute, the same principles would apply. I'd still be using the same logic. It doesn't change just because the time interval changes. Price is price. Same thing goes with other assets. It's even in Bitcoin, it does the same stuff. Yeah, this is a very powerful piece of information here. If you haven't saw things this way, I mean, you're gonna hopefully you're understanding so far what I'm describing. I've talked about this a lot. Took it a little bit further right here, which I normally just do in my private group. But hopefully you guys took some value from this here, because again, we're going to use this logic when we go down to that lower time frame and observe the 630 open and try to find a setup. Right, we've already taken out this liquidity here, so pre-market has now purged liquidity. We're reaching into our little level in there, which was this little piece of price delivery. I mean, this is balanced, right? This was the only imbalanced piece that I could see in this range. So again, this response down here is definitely kind of interesting. It's done this a lot over the last couple of years, or year and a half, almost 2 years. There's lots of very aggressive repricing, and then price just parabolically runs higher again. So we can't count it out. Can't just assume overall bearishness, but if it's going to be bearish, what we have to see from this time frame for the narrative, we should see this get back down below that new week opening gap. If we get back down below that new week opening gap, again, it's really, really balancing that area. And once it starts to tag it and then pushes away aggressively, and say we get displacement, you could then be a lot more trusting when it comes to the downside. Otherwise, if we break to the buy side today and it gets above, right, this level, we may see price make new all-time highs at some point. And then especially if it overtakes this fair value gap, what would happen if this fair value gap gets overtaken? It becomes an inversion fair value gap, which is what? Let me know in the chat based on what we just talked about. If this turns to an inversion, what characteristics should that have, right? In terms of the price range, what should it be classified as? I'm going to run to the bathroom real quick. Answer that question though, you guys. I'll be right back. Okay. All right, we're back. Sorry about that. Yeah, let me see. So yeah, again, guys, if this gets overtaken and it goes higher, I see you guys didn't answer the question. What does that turn into? IFEGs are balanced price ranges. Exactly. Exactly. Maddie said Ian Lion. I said it yesterday. Yeah. Yeah, we've we've had some pretty crazy last couple weeks. Caught a 400-point trade last week. Multiple. I called 6 different entries in that in this huge decline. Again, I posted it on Instagram. And again, those of you in my private group, you know what time it is. Yo, what's up, Byron? Good morning, brother. Yeah, Maddie, one of a kind BPR. Yeah. Oh yeah, one kind of BPR. Yeah. There's like multiple. There's literally tons. Maddie said, yeah, see, there ain't no lying out here. We really do this. Appreciate y'all chiming in. But yeah, so if we break this midpoint here, this should also be a form of a BPR when we have a wick with displacement that takes out that low. When it comes back up into that, we should look at the sensitivity already from that little level. It's already going up into that, and then it's coming off of it. So now what we're gonna do, we're gonna actually pull this down a little bit and start to go to our different area or different time frames. Okay, so we do got a regular trading hours gap up here as well. That's another form of inefficiency. If we do see that this does want to blast the 50% of that. If you guys remember as well, I talked about this gap as price was starting to retrace. It was a daily fair value gap. It was also a inefficient regular trading hours gap on May 26th. If we go to the 15-minute chart, you can also see what that was right there. So that lower portion below that, right? When price was over here, because that regular trading hours gap was not traded into, it should act as a magnet if it's going to go lower. So we got a similar thing happening above us up here. So if this does choose to rapidly increase and rally up and protects this low and stays above the midpoint of this range, we should be able to see price continue and try to get up into that level. And we got equal highs up there too to further justify if price does want to go up there. And it kind of shirks the downside movement. But again, this daily chart, we're going to have to see it prove it because it can literally do, both things. If you look at price, we're inside equilibrium right here too. Okay, so this high to that low, we're resting right at equilibrium. When we rest at higher time frame equilibrium price points, we don't want to see it do that because that can promote consolidation. Okay, if we're bouncing around multiple new week opening gaps, new day opening gaps, regular trading hours gaps, if they're just like bouncing back and forth, not really escaping, just going up to one, down, up, and just sideways, and it's at equilibrium, right? It could be a problem. And we're in the summer months, which has a seasonal influence of price giving harder to trade environment, which again is consolidation or just a lackluster response. But you see that little area that I highlighted before the fact, right? That little piece. Isn't it interesting how it just tagged that specifically? And it's starting to react a little bit away from it. All right. Let's just evidence that these types of levels are significant. Okay. That little piece is something that, is reasonable to revisit, but we want to see it quickly get away from that if we're going to trust that this is going to be a bearish move. Like I said, from this low, given that it's a large wick followed by displacement, if it's bearish, we should see this whole upper range up here act as a balanced price range. Just as this area acted as a bullish BPR. Okay, it came right down into it, didn't even attempt to get to the middle. It's going to be the same thing with this. Okay, this low to that high, all of that should be balanced. We have buy side, sell side, right? We've got a large wick followed by displacement. That's a PD array in itself. The wick followed by displacement. When it comes back up into it, it should show sensitivity. In this case, lower sensitivity. If we do see this level get traded through aggressively, right? That'll put us in position to then use this as a target, these equal highs, and then we'll see this as a market maker buy model. And that'll just act as previous sell side, right? Previous bearish order block that then gets overtaken because bearish order blocks and bullish order blocks are BPRs. If a BPR is taken out, it now inverts. So the same thing should happen with this order block. If it gets above it, it should invert, assuming that it's going to hold those characteristics of continued buy side delivery. Okay, so when it gets up there, you'd want to think about these things. You'd want to be thinking like, okay, well, if this is going to be trustworthy to be bullish, prove it to me, price, trade into that, and then bounce away from it. And then if you get a change in state, we have, again, very logical levels up here that we could then use as a target to frame a setup on. Again, we're trading inside this range. So that would be early signs that we're not really willing to try to go lower anymore. Okay, we have built liquidity here. You see stop run, rally, stop run, rally. So whenever you see stop runs leading to rallies like this, sell side ideas failing, order flow is not bearish yet, right? And if it never kicks in and it starts breaking through these upper levels that we've outlined, then again, you got to make sure you're following where price is going. And if price is going to keep going higher, when it presents wicks or bullish order blocks or fair value gaps, they should be respected in their upper 50%, right? They shouldn't be getting violated completely. If it fills them in completely, it's not as bullish as we want to see it be, right? If it does take these levels out, it'll end up being bearish. But if you're like in a trade, or even if you're watching this higher time frame, whenever you see a large wick, the next candles that trade into it should respect that upper 25% if you're bullish. Same thing with order blocks, right? When it trades into them, it should respect those upper levels. Same thing with the breaker, right? We talked about this on Sunday. If this was going to be bearish since we opened up down here, it needs to stay below that 50%, but definitely below that upper 75%. And once it takes it out, it's inverting the level. And look at the sensitivity to that. Okay. And we're not really getting that aggressive response lower to really justify that buy side has given up. So again, we're at equilibrium. You got to be patient. You can't be in here just swinging for the fences at anything and everything. There's a method to this stuff. And you have to understand the narrative, because bias doesn't work, like I said, if you don't have the narrative that justifies the bias. Okay? So yeah, I hope that makes sense. I hope I've driven that point home, because bias is something that people just don't understand how to utilize. And there's a method. I teach bias every single Sunday for what, 2 years now? Almost 5 years in my private group. So, all this stuff is very important to bias and narrative. So again, we have 7 minutes till the open. Again, we're resting at equilibrium. Let me see. Okay, so I don't know why I have 2 there. 2 of the same thing. So yeah, we'll keep tabs on this aggressive behavior if it gives it to us. Breaking down below this low, we'd have to see it start to respect that upper level of this new week opening gap or the daily volume imbalance. That's right there, right? Yeah. A response off of this would be again, worthy to observe. If it was to break outside of this, again, it shouldn't break through that if it's going to be bearish. This buy model should end up failing. And then we should end up seeing this low to this high up here, and wherever that high remains going into the open, we should see that stay intact and then start to break down. And then we could look for the sell model characteristics. And again, something that justifies the drop if we do get displacement is the fact that this previous day's regular trading hours gap is open. There's no buy side or sell side down there. That's a gap. If you go to the regular trading hours, you could see the gap. Okay, so that's inefficient from the lens of regular trading hours. Electronic trading hours and regular trading hours are separated entities. Okay, some people only trade regular trading, some people only trade electronic trading. And you can imagine if you're a regular trading hours trader that only trades during regular trading hours, from that perspective, you haven't had the chance to get in. So there's orders that are resting down there that haven't been triggered, right? So that's why when electronic trading hours trades through some of the regular trading hours levels, it'll revisit those levels. Just because electronic trading trades through particular PD arrays or liquidity pools, or through a particular level in general, that doesn't mean you just disregard it. You have to consider the regular trading hours traders. Okay, ICT's talked about this. That's why you keep tabs on this, even if overnight trades through those levels, right? Or offers price at those levels, because electronic trading hours had a chance, but the liquidity is still relevant because the regular trading hours people have not had a chance to engage. So there's resting orders below this low, just as there's resting orders above these levels. Okay, so there's inefficiency all over the place, right? And we're at equilibrium. So it can go either way, you know. We could stick to the higher time frame narrative and say we didn't break this low, so the overall bearish breaker never got triggered, right? It almost did, right? But it's not respecting it. We're breaking outside of that whole entire range. We're getting back above this previous balanced price range, right? High to low with the higher high. Sell side, buy side. So again, we have to wait, right? We're going to see what the 630 does. Preferably, we're going to observe that first 30 minutes. Let that opening range print, right? We're going to have a new regular trading hours gap as well from this level. So from this high here, with the open or active price level here, down to the close of yesterday, which is here. So from here to there, there's inefficient price delivery. So we have a premium that we're opening up at. I'd say that if it does decide to want to go higher and say we do get up above this, first and foremost, I would like to see if price can reach down into the 50%, right? If this close from yesterday was to be right here, like say 630 was right now, which is going to be, I would like to see if we can open up, come down, sweep some of this out, at least attempt to get to that. If we flirt around with that upper 25% and it can't even get to the midpoint and we start to just displace away, again, that's going to tell me that this is extremely likely and these lower levels are less likely. If this breaks down aggressively, right, and trades, through that midpoint, and then it comes back and, still aggressively displaces, and say this new week opening gap holds, which is a daily volume imbalance, then again, that builds the narrative and trust in the bias to go lower and then target the rest of this inefficient price delivery. I hope I'm making sense. This stuff is, it's got, reasonable amount of technicals to it. Hopefully I've made it a little bit simple to understand, but these are things that separate you from the masses, from someone that claims they trade ICT concepts to those who actually know what the hell's going on. There's some stuff you don't have to use, of course. This is how I use things. These are ideas that resonate with me, And I hope that I've been able to explain them in a way that resonates with you too, because they're extremely powerful. And if you're like me and you need that why behind the trade, why can I trust it? Right? Because I had so much issues getting into a trade and trusting my analysis. And these are some of the things that help me trust it, make it so I'm not so anxious, in a trade, because we all have that in us, some more than others, right? So, so again, 630 just came out. We got the daily open price here. We're above that open price. Notice what it's doing here. Seems like it's immediately looking to potentially seek that midpoint. We're still respecting this level that I painted early on before it got there. Again, I'd say that if this gets above this level, that'll be where I'm really, really confident in bullishness. Otherwise, let's see how it treats this first 30 minutes and this regular trading hours gap. So we got premium open. We have discount levels that are available. So hopefully you guys have burned this image in your head on what's going on in the upper time frame. So let's move it down to the one hour. See, we got that candle right there. Again, if it gets beyond that, I'm looking at market maker buy model. Keep your risk low. I'm not encouraging you to take any trades. Obviously, I'm not a financial advisor, but keep your risk low the day before CPI. You don't want to play games. They can build liquidity for CPI, which they will do, right? So we'll see what liquidity they want to leave available, what they want to take today. But yeah, we're inside this 8-hour upper portion of the fair value gap. Okay. The current 4-hour candle, you see this lower movement up to the level in here. Again, that midpoint definitely looks pretty juicy to me. I like that response. Do got relative equal lows here that look pretty obvious. It's right below that open price. So you can couple these equal lows here from London, which is London's low. Now we got displacement, very strong sensitivity, SMT at the highs. I really, really like that reaction there. We have a high, low, failure swing, breakdown. This should act as a mitigation block if it's going to continue. Okay. And again, we got that 50% right there, the regular trading hours gap. We have lots of discount that it can target. We're definitely respecting this level, it seems. So we should get sensitivity here to go lower. Again, it's pre-market. Well, now we're in the open, but it's too close to the open. I want to wait for a macro because there's no news and the rules state no macro, no trade. At least close to a macro, right? If you can't even get close to it, it's high risk to take executions in this. Obviously, what we've painted out is working out. So that right there would have been enough if you were a little more ballsy. It's 30 points already offered there. It's got a large wick here, followed by displacement. Large wick. Displacement through the low should act as a BPR. We have this mitigation block, which, given the fact that we left it, see that large wick with displacement, makes that mitigation block even more powerful to go lower. Again, I'm going to wait for the 630 to 650 time to pass. I'll just take this as a opportunity I didn't engage. It's outside of my rules, so is that an opportunity? If it's outside of my rules, it's not. Could be for you. right? But it's not for me when it comes to CPI, NFP, FOMC. I don't trade aggressively during those times. If this was a different day with no CPI or NFP or any other news, that would have been potentially reasonable. But again, it would still be breaking my rules because we trade around certain times strictly, and being disciplined sometimes sometimes will make you miss moves, and there's nothing wrong with that because we find moves the whole entire session. Okay, watch this wick in here. See, that offered a pretty nice run, huh? From right there down to those lows. These were equal lows too. So let's see how sensitive this wants to be in here. Revisiting that mitigation block. Again, if it overtakes that mitigation block, we have an inversion here too. So that would turn off my interest to want to see or seek a short. That'll put us more so in alignment with trying to get up here. So yeah, this needs to be sensitive. We need to not close in the rest of that fair value gap. We do not want to see that. If it's bearish, we do not want to see a full closure of that because that'll turn this off. So the small scalp was offered beautifully, but this is the exact reason why. This is a good testament to why I don't engage right at 630. Obviously, if you follow the rules and take 20 to 30 points, like we say is the standard, obviously there was an opportunity there. Okay. I can say if this respects this and we break this low here, I wouldn't be shy about this level either. If it returns into that, that would push us down into here again. But now we're overtaking this. So now we got the mitigation block potentially being inverted. Turning to an inverted fair value gap. So again, notice what I said. If it was going to be bearish and trustworthy, it would have had to not close in the whole entire fair value gap. Now that it has done that, if it was to continue to drop, it's less trustworthy because now we're not leaving levels open. High probability, low resistance type of delivery comes from seeing signatures like this be respected. This now looks like it wants to get up into here, so you'd have to be flexible. Counterparty was triggered in here. I don't know why it always takes my dollar off the chart. It literally does this to me every single day, and I don't know why. Kind of annoying, just a little bit. Okay. Okay, so we got the dollar moving up a little bit from that 1 hour perspective. Yeah, we got the other ones running higher. So again, that pretty solidly pushes against the interest for us wanting to see this go short. We should see if everything's going to be symmetrical, given the other assets, given what we see so far, the full closure, right? It should close above this inversion. If not, and we displace lower, again, my attention would be here. But there's nothing to do in here for me. Can you see that attempt to get to that 50%? It's going to move up a little bit, right? So we have a bearish order block here too. So that midpoint, we want to see if that's going to hold as well. If it's going to be bearish, on a closing basis from this 3-minute chart, that should not be closed above. You notice how it's not really being sensitive to that inversion in there? You know, this is kind of seek and destroy vibey. Buy side taken, sell side taken, back to the middle. So again, we would elect to wait. This wick in here too, right? If it was to break through that, again, that'd be a balanced price range. And we could use that to then justify a move down to here. Say it returns to that lower 25 to 50%. If it gets down below that, we would then be able to use that to then go even lower. Target this. Keep your eyes on this order block here. Let's move to the 5 minute, see what we got going on. So yeah, we got mitigation block in here. So the inversion is kind of being messed around with. I think we'll keep this mitigation block on the 5 minute visual. So that may hold in there. That this may have been an immediate rebalance if we get displacement. Yeah, it looks pretty aggressive, huh? It's holding that 5 minute mitigation block. We have a change in state on the 1 hour. So that lower portion of this 1 hour order block is helping us justify that we're now going to still lock onto this London low. Again, all of this can happen and that's totally fine. I'm not taking a trade because it's outside my rules. Right? And you could see how the rules that I follow or that you could consider following, how it would have saved you probably from taking a loss unless you executed down here and were willing to have a stop that's much larger than we like to have, which is about 30 to 40-ish points. Again, keep your eyes here. It's very hesitant to get down there, right? Let's see if that changes. This is the 4 hour open price, right up in here, this line. The current 4 hour candle, so you could see what that looks like. It's ran up, and we're getting below that open price. So we may see 4 hour bearish power 3 looking to target this low down here. And again, nothing is to be engaged given that it's too close to the open. We're almost into the 6:45 time, which is, reasonable for early macro delivery. We like that 6:45 time. So still got a couple minutes to hit that as well. The opening range, high and low, is being established in here. So that's liquidity that's important. Mind you, we took stops up here, which was previous day's high. So previous day's high has been triggered. That liquidity has been engaged in the market. This needs to be sensitive here as an algorithmic rebalance. It needs to follow with displacement. We have all this price delivery that's balanced in there. If it's going to go lower, it needs to stay below that lower 50%. If this low ends up getting above this high, that's a type 2 dealing range, and this high will be swept aggressively. So you see how it's not really showing much respect to that? We've had a big run, came down, tagged it. It's coming off that low pretty aggressively. It's not closing or giving it the ability to close below that change in state. So it hasn't fully changed state to the downside against what it's done already. So now we got a mitigation block bullish here. So let's see how that's treated. And that may be enough for us to see price turn around and run through the highs up here a little bit more. Type 2 dealing range has been engaged. That means that this high has a high probability of being swept. This high being swept creates a bullish breaker. And all of this down here is a balanced price range with a stop run. So hopefully you guys are able to follow along. We can see the price is accelerated like we said it would if it got above this high. So if you notice, we walk through all the different pieces of price delivery in here. What would have justified continued downside? What characteristics we would like to see in price? And what characteristics we would like to see if price wasn't to respect that? And where price would likely look to accelerate, which is getting price above this. And where it would have been justified to continue to try to seek a short, which is here, if it would have held, well, here, at the mitigation block. But it triggered this one in. I would have preferred to have like a little wick into that, right? Offer a little bit more of an opportunity to catch price moving into that PD array. But again, it just chose to engage it and then just rip, right? Like I said, once it gets above this high, it should get up there and blow these levels out. Again, we're just getting into the macro here. So I'm still going to be waiting for the macro. You see this red line here? That's indicating that there's potentially SMT happening at the highs. So yeah, this thing is on a rampage, the S&P. We still got SMT at the highs here, as you can see. We got dollar going higher, so there is a decoupling happening. So again, it's hard to trust such a decoupled market. But nonetheless, hopefully you guys are able to understand what engaged, excuse me, what engaged when we could have anticipated that this was going to go up. And excuse me, I got like faint hiccups. It's so strange. Sorry about that. But yeah, like I was saying, hopefully you guys are able to follow along in this. You know, what YouTubers out here are able to note it tick by tick and then tell you exactly when you can anticipate something's going to fail and then see it unfold like that. Could a trade be taken on this perspective when you see all this stuff happening and like we saw this mitigation block? Could you engage something like that? Sure. Right. But again, you either have rules or you don't. And I have rules. Okay. And I'm not trying to be undisciplined and too aggressive during times when I know that things should be pulled back. I'm not trying to show you guys the wrong way to be. I don't want to, you know, get you guys all emotional, right? So hyped up and all that stuff that doesn't get you where you're trying to go. Right? Being level-headed, watching price, not really worrying about it, seeing when price should or shouldn't turn, understanding the language that's being spoke to you in price, candle by candle, time frame to time frame. You know, that's what's truly significantly important. And yeah, we could see that this thing is now absolutely ripping. So again, the level that I talked about, that being this lower portion to the upper portion up here of this candle here, that's what this in particular is. If we get above that, again, that puts us fully in a potential for market maker buy model. Then if we go to the daily chart, we can also get that level. So daily FEG high. Again, we got that regular trading hours gap up here. It's starting to be more and more likely that it's going to get up into that. It's magnetized, pushing price up there. And again, we do have the wick midpoint here, which it's pretty solidly at the upper portion of this. So I think that we don't have to add that. We're definitely trading even deeper into this previous basically suspension block, right? We got a volume imbalance there, volume imbalance here. So this whole entire range right there is worthy of being outlined. So if we look at the different quadrants, you see that lower quadrant of that suspension block? Literally, it's right at the low, right in there. Got the 50%, which is here. So it was right there, so we flew through that. And we got 75%, that's up here. So yeah, it's just been a straight shot from that mitigation block that we outlined. Unfortunately, it just wasn't in the proper time for me to want to engage. It was not in a macro. When there's no news, again, you got to be very strict. ICT teaches to be that way. Unless you want to be a little bit more aggressive, which, if that's your cup of tea, that's your cup of tea. But, I'm very, very conservative. I know when to be aggressive, and a day before CPI is not that day. Okay. So we do see that was a spectacular run. There was SMT here. See these green lines? It's SMT there. We do got the dollar starting to really apply downside to this buy side imbalance, sell side inefficiency, or BISI. So we'll see what happens closer to 7 a.m. We'll see what other opportunities can arise. But the short idea, right, inside this lower portion using this mitigation block or this low, high, lower low as a breaker, right, that little piece in there, that little area specifically we talked about could send price lower. It targeted these lows, never got us to London lows, which I would have liked to see. Offered what, 40 points, something like that. So well in 50 points, 60 points. So that was a nice move. And then of course we got the mitigation block, right? Could have looked something like this. Once it tags that high, you could have just engaged right off of that. I guess the risk to reward on that one was reasonable. But it was close enough to a macro. So we can consider this as a missed opportunity. But right at the time we were waiting for, right at the time, 6:45, right at the time that I was telling you we want to wait to see an opportunity, it arrived right on time, right? But this opportunity could have been something to engage as well. So 2 opportunities, both buys and sells, navigating the narrative, making it make sense for both sides, while trying to see if we could favor the initial idea, which was here, to go short, right? To just see this as a retracement to go lower. But again, not letting our biases, right, our like what we want to see in price take over so much to the point that we can't see the other side when it's offered, right? And we navigated it literally minute candle by minute candle. And hopefully you guys were able to take some stuff from that. So yeah, this retracement into there, it's still, a bit iffy. We'll see if the dollar wants to fully encapsulate this. I'd be more confident and, and being more aggressive. If we can fully get that overtaking, if we can see this fully overtaking this little area in here, let's pick that up a little bit. I'd like to see that because that'll fully justify that this is going to go lower, right? Or at least give us very strong early indications that it's going to go lower. We got the yields as well. If they do break down, we got change in state if it breaks down through these. We got the bonds, the 16-hour chart. If we see the bonds rally up aggressively from the midpoint of the suspension block, right? If we get an order block traded above, all that stuff further justifies that this downside movement, which again, when you see this type of stuff, you got to be cautious, right? I mean, this is a violent liquidation event. You can't just go in there just reckless. You can if you want, you know what I mean? But hey, if that perspective has not gotten you results, then maybe it's time to start trying a different perspective. We've gotten good results. So there's something to the perspectives we share. So, but hey, to each his own, right? So again, like I said at the very start, I wouldn't be surprised if it attempted to get down to that or fully get down into that regular trading hours, 50%. But because we have failed and hasn't had a chance to do that, or has kind of refused to do so, we really got to be a bit cautious to the fact that this may look to continue to keep going up. I would like to see, for me to be the most comfortable with buys, I need to see this take this range out, get above it, and then use it as support. And then I can use second stage distribution in the buy model to then get us to target the buy side up there. We do see, let me drop down a little bit. We just get a big, yeah, we just got a big turn here from that 25% of that wick on the daily chart. We got the first presented fair value gap here. If it overtakes that, that will be something very strongly justifying the 50% of the regular trading hours being targeted. You notice how I haven't told you guys or mentioned chasing this up? There's a purpose behind that, okay? So yeah, watch this first presented fair value gap. If it breaks down through that, I would see that as a situation to study. If it breaks this low, we then have a bearish breaker. So you could wait till that as well if you want. But this breaking through that would be a more comfortable trade setup to observe. And again, the dollar is still respecting that fair value gap that we talked about. It's not slamming through it aggressively. We do have a nasty correlation problem going on. I guess the lower the time frame, more smooth it looks. Okay, so now we're getting this drop. We had, seems like we're having a market maker sell model unfold in the 15-second. But again, this here, right, should hold the midpoint if it's going to be bullish. Oh, wait, that was a 2-minute, huh? First percentage down there. Yeah, I think I like that one right there. So yeah, if we can get down below that, I mean, look, it's already starting to show respect to it. You see that? So an aggressive person would be able to engage that one right there. Put your stop up to the fair value gap. I'm not about to be aggressive in this. I'd rather see it fully dig, sacrifice a little bit of R. So watch this level right here. Let's get the 5-minute order block that's just below that. We got lots of liquidity down here just resting. Clearly, this is not trying to go up. So again, that right there looks like something reasonable. See what she wants to do here. See if it can't stay below that and then get us down to London's low. So yeah, if this is going to be trustworthy, it should not overtake this whole fair value gap. Preferably, we stay in that lower 25%. Again, it's a pretty wild environment right now. It's pretty nasty. I think it's pretty reasonably justified to see if we can target this or even London's low. But again, if it fails to do so and we break back above this level here, then again, we may end up seeing this nasty whipsaw, which just fully justifies the perspective I shared early on, how we're not trying to be aggressive in this environment. It's a day before CPI. There's a lot of shenanigans that could take place. So we'll see what it wants to do. Whoops. 15-minute. That's a nasty wick. That's a rejection block there. Rejection block there. Again, trend line liquidity. London low. I like that. It's not very far away. assuming that this is going to still want to go lower, right? This whole thing was just a retracement. That's a pretty nice response. Higher time frame seems to be justifying the potential for this idea. And I'm gonna take it. Oh, I'm gonna take it right there. Oh, I got a little bit more. Holy shit. And that's how it's done, folks. That's how it's done. Every day, and it won't stop. Who's doing it like this? Literally. Not to toot my own horn. But there's a lot of bullshit, a lot of idiots on social media, a lot of stupid people. Okay. Who's doing it like this? And I have private group students in the chat right now. Okay. We do this every day. That's not an overstatement, understatement. We do this every day. I have a small channel. I'm not very flamboyant. I don't shove my profits down your throat. Okay. But nobody does it like us. There's a couple that, there's a couple that do it bigger, right? Because they just been doing it longer. Or they just, you know, maybe they're more aggressive. I don't know, however you want to describe it. But we're consistent and I prove it. And hopefully everything's made sense, you guys. I really hope it does make sense because I truly want to help. That's why I'm going to be live multiple times every month. Okay. And I just want you guys to learn, you know. But, people got to know what time it is. Okay. Nice. Yeah. If you took this trade, throw a W in the chat. And for those who like to see that proof, amp live. Whoops. Live account. I'm not demo trading. I'm not saying you should live trade, but I'm just saying we do this on real accounts, funded or personal account. I spend more time on my personal account because I built that shit for 5 years. Okay, so it's big enough size that I can do reasonable stuff on. But that's 75 points, 42 point stop. Didn't have to have it that high because again, buy side, sell side, fair value gap, respected the fair value gap. Okay. But that's how it's done. Right. And there are haters, and I know it probably sucks. Okay. But I can help you too. Right. If you're a hater or whatever, maybe I don't do this or do that to make you feel comfortable. That's fine. My charts speak louder than I ever could. And it's been happening for years at this point. And, just know what time it is when you come to this channel. This is not a fraud channel. There's no fake nothing. It's all real. I have students with me every single day, literally every day. Like, what mentor is going live every single day with their students, right? Allowing questions to be asked, right? Showing you things that are provable every day that they're in the chart in an organized fashion, right? There's not many people doing it. There are some, right? You got to give credit where credit's due. JCap is someone I respect. Trader Kane is someone I respect. Who else? My two other mentors, who are in the charter group. They've been trading with ICT since, man, like what, 2012, I think, on baby pips. They've been here for a while. Yo, what's up, Choezi? Welcome back, brother. It's good to see you. Yeah, big W's in the chat. Mind you, I exited. That doesn't mean you should exit, right? But then again, I'm not telling you to get into a trade. But I still have the belief that we could get down to here. Because it's CPI week, I think 75 points in a trade is good enough. Okay. Notice this too. I told you guys, we're going to wait till 6:30. There's no news. We got to wait till 6:30. Don't chase the buy. Could you have taken this buy that I called out? Sure. I called 3 setups today. Okay. Within what? Within 35 minutes? This small short in here that went 60 points, right? We talked about that as a potential opportunity, a little aggressive. And that wasn't something I wanted to take, but it went right to, or in the direction where we said it should at the start, towards the midpoint of regular trading hours gap. Then I talked about all of this. If it's going to be respected and it's going to give us another leg, I talked about all the reasons and characteristics and signatures that should lead to that. Okay. It failed to do so, right? It gave us a pump fake, but I said if it fails and it breaks this high, it'll take this out. If it takes this out or just simply takes this out, we should rip, right, towards the potential upper regular trading hours gap potentially. Okay. It ended up ripping above that, created a bullish breaker, created a mitigation block. We talked about this mitigation block. That was what was used to then frame this setup out. Okay. And then again, it broke that, got above where I wanted to see the mitigation block be respected, created a new mitigation block as it was forming the bullish breaker after it took liquidity going into the macro. So time and price. This is how you align time and price together. Okay. And how you blend narrative and bias together and what the difference is. We talked about so much stuff, and this is like a master class today of very, very detailed things. And I hope you guys have been able to follow along. I always think in my head, like, I hope everyone's following along. So if you guys got questions, let me know, because I'm not here just listening to myself talk. I'm here to actually get you guys progress so you can get to where you're trying to go, you know? And again, I appreciate all the support. Appreciate those of you that hop on consistently. And again, all of you guys that have hopped on with me continuously have told me in DMs that you're making progress since you've been here, right? Even those that have been with me for, less than a month, let alone those that join me in the private group where we're doing this every single day. What you saw today, we're doing every single day. We're not perfect. I lose trades. I get it wrong sometimes. I'll be the first one to tell you that. But more often than not, even if we lose a trade, we still navigate where price is going to go by the end of the day. We know by the mid portion of the session, we know what the vibe is and where we went wrong and what was disrespected and what the overall end result should be for the day. Okay, so this was all manipulation. I think this is a good time to point out my beautiful New York Session Power 3 indicator. Something that comes with being part of the private group. Look at that. Accumulation, manipulation, distribution. It's identifying it in the perfect sequence. We'll see, right, if it can get down there. I think it will. And it'll just be yet again another amazing example of the indicators that we have also adding value to you for being part of my private community, believing in me as a mentor. It's the least I could do, right? Aside from all the other stuff, right? We do so much. So appreciate the subscription. Carl, sorry if I got that wrong. I'm glad you guys get value. These are some indicators, though, if you guys do want to see some of the indicators you see on my chart. Some of them, like the SMT indicator, 90-minute cycle, 4-hour open. This time element here, the Razor model, which is my signal situation, right? That it's built off of my logic that I utilize for one of the models I trade. I got standard deviation indicator, right? Helping with the identification of the 2, 2.5, 4, 4.5 standard deviation. So auto plots it. We got central bank dealers range. We got another one that's part of the WMG suite, which is the new week opening gap, regular trading hours gap, new day opening gap indicator that one of my students made. Shout out Mark. And then the rest of them, obviously, they're from other great creators as well. I'm really, really confident this is going to go down, by the way. So we can go out on a limb and say that's another execution. This is a breaker, right? I told you when it gets through that low, that's going to act as a breaker too. So that should get us down to our level. Right? See, look, if I would have held it, right, and wasn't satisfied with 75, never even look at the drawdown. We went into what? Maybe 11 points drawdown, if that, because the time is correct. And now we're going to hit our full target. So think about it. I've given you one trade, the short, two trades that we identified, the mitigation block buy, right? This was a mitigation block sell. This was the buy. Then we talked about this short in here, right? And then you can also add another one, right? Which could be this one in here. You could use that order block or this order block. Or if you entered this one, right, you could just couple them together, right? That's as one. And full target has now been met, just as we said. So another picture perfect session. Another trading day that went right to the target. Made perfect sense. I mean, we do this every day, right? And those of you that have been with me for a while know this ain't new, but it never gets old, does it? Never gets old. It's amazing. So this movement here, once we tag that low, obviously we ran up a little bit, came down into that, I'd say the 50%. If you want to get real precise, you can go put on the 8th levels like ICT teaches. Drag that over. Went right to the 8th level from the suspension block. Right to that 8th level. Perfect. Perfect alignment. See that? Just make it even more obvious. Perfect. Well, near perfect. Okay. But nonetheless, closure up to this point below, we're back below that new week opening gap too. So that's really powerful. That means that all we did was come up from this low. This is a stop run. Okay. So price came down, rallied up. If this ends up below this low, this is again the concept of deferred liquidity. And we went right down into it, set the lows, because this was a stop run here, and this was a BPR. It didn't just fly on through that low. It's now creating low resistance, going from a stop run to now a failure swing. Stop runs being traded through are high resistance. Failure swings are low resistance. Okay, those are the classifications. One of the easiest ways to identify if a liquidity pool is high resistance or low resistance. Is it a failure swing, or does it already have a stop run taken out and it's just a high with a stop run? That's high resistance. Failure swing is low resistance. Not gonna lie, little salty, didn't hold it. Not gonna lie. Not gonna lie. But went right to the target. And look at how perfect this indicator outlines this. I mean, it's brilliant how this happens. 7 a.m. starts the displacement. So amazing. Accumulation, manipulation, distribution, New York session power 3. Yeah, Jen, keep holding. I'd take most of it off. I'd take most off and then put yourself to break even. You can put if it was me, I'd put my stop right there, right at the 75%. And then as we break lows like this one, I'd put it to the 50%. And then if it just really rips, I'd put it down below that new week opening gap and leave it there. Hold it the rest of the session. Under low, bagged and tagged. Exactly. Tried to soup the high, but went a little further than we expected. I got in shorts, but I'm riding this. Yep. That regular trading hours gap fulfilled. That's a good target. Remember what I said too, this run up, if it does break down and go lower, we now are classifying this as a market maker sell model. You take this range in here. Once it gets through that, it should act as a balanced price range. And we're below that, lower portion of the regular trading hours gap. It does have only sell side offered from this low. So if it needs to come back up there, it might. But then again, we got that new week opening gap that's been massively utilized for 2 days straight, 3 days. Let me get that off the chart real quick. Man, look at that. Another 200-point move that was offered from the entry that we called out. It's beautiful, right? It's freaking beautiful. Freaking beautiful. Yeah, not gonna lie, a little salty. A little salty, just like that much. Well, good job to those of you that did engage. Those of you that this made sense for, and are now still holding through this big run. You're catching a nice run. First live trading call of the week. I think we started off with a bang, if you ask me. Who am I, right? Massive W's in the chat. Banger. So how many of y'all did take that trade? Let me know in the chat how many of you guys took that trade. I know that Jen took the trade. Alvinity, I'm assuming, took the trade. Byron, I definitely know took the trade. It's a short. Byron be getting in the shorts. King of the shorts. She took it beyond oxygen. Nice. Damn, first trade for a fresh funded account. Damn, that's nice. Put you in good position. So one thing you guys can do here is take this high up here down to that low. If you wanted to look for even further targets, Jen, go like that. Look at your 2.5 standard deviation. I would not be surprised if we get down to 28,210 or 29,210. I think that's reasonable. Yeah, we're easily gonna get there, it seems. Big time play. Beautiful, because think about it. Think about what's going for this trade here. Price rallied up. Like I said, the line in the sand was that accumulation level that never got tagged, right? And we have this wick in here that should act as a BPR. So all this did was offer buy side to the inefficient price delivery that only had sell side. Came up, took out previous day's high for counterparty liquidity, and then immediately broke down from the low of that wick, 25% of that wick too. Aggressive repricing down, creating a bearish breaker. Right, we talked about the early idea in here, that fair value gap that got overlapped. And then price broke down, offered a breaker, and then took off. So now we're back below that daily volume imbalance, right? We respected upper PD arrays. We haven't closed outside of this upper level here, which would have disrespected on if it went up there on a closing basis, it would fully disrespect and turn off the potential daily bearish breaker, weekly bearish breaker, right? This low, high, lower low. This run up here also came up into that bearish order block on the weekly chart. That's a weekly reaction off of the weekly order block, off of the daily volume imbalance, inefficient volume imbalance, offering buy side, now it's efficient. And then we drop from that perspective, which is the narrative, down to the bias, which is then justified by this breaker being taken out. Early sign was obviously the fair value gap that we talked about. So you can see from time frame to time frame, from narrative to justifying bias, right? And then everything in between that we've talked about. So yeah. So I guess we'll focus more so because I'm definitely done. I'm not going to go and take another trade. See, so just curious how I can build confidence to short the previous day's high. Honestly, you want to build confidence, you got to dig into back testing. That previous day's high, if it gets swept into a higher time frame PD array like this, and it's potentially looking bearish like this, you know, you may not be a trader that's comfortable with shorting at the high, picking the top. That takes a lot of experience. If you have like less than 5 years experience, you're probably not going to be able to do it confidently for a while. Right? You also want to understand SMT. I'm not sure if that's what you're asking, but it's good enough to short close to the high, right? You want to convince yourself that that's fine, right? Because, you know, many times when it takes this, just think counterparty liquidity to then target. You want to see buy side taken out to then target sell side. If your narrative is bearish and you see the previous day's high get taken going into New York session, and then you see a rapid decline, right? When you study that long enough, you start to get comfortable and familiarized with this. I saw this as it was printing. That's part of the reason why this was a comfortable idea for me to engage. Because I know we're anchored in a higher time frame framework. This high is just simply part of this stop run into that level. Notice that little piece of price delivery that we outlined well in advance. I told you guys to watch that. You notice how it didn't even get far away from that? It kind of stayed close to it, right? That little area in here. Notice how it barely shot over it a little bit, but came right back below it. Let me kind of mellow this out a little bit. There's a lot of stuff going on. And that accumulation that we talked about, right, was really justified. The best way to amplify shorting highs and lows from the previous day is, again, building the context around it that should justify that level being sensitive. We're in a bearish potential trend. We're studying and anticipating price respecting these premium arrays, navigating the likelihood of it potentially disrespecting those PD arrays. But price showed us nothing that fully disrespected those areas. This was an aggressive run higher. We had a potential run that could get us up into this level. So it's better, at least for me, because I'm not one that shorts all-time highs or just highs in general. I wait for the response off that because you never know, right? It could take that high, come back down a little bit, and then just rapidly continue. You could be wrong. And I'm not willing to take that risk, me personally. But I have friends that do, right? And they use the higher time frame PD array anchoring. They use the time element going into the New York session. And then they also use intermarket relationships and, most importantly, SMT, right? If you can get SMT above a previous day's high, did we get SMT? No, in this instance, we didn't get SMT. No, we did actually. You see how the Dow failed to take that new high, the previous day's high, before it declined? I don't know why my indicator's not pointing that out. But yeah, that's SMT there, right? So SMT with the Dow, no SMT here, right? Well, It made the higher high in the S&P, and the NASDAQ didn't make it in the YM. Okay. And then it presented us with this. So it's an even deeper reason that this was going to decline. And the only way that we're looking to be bullish is if it proves it even more aggressively, because this was a huge run. Remember, this green box was the accumulation I was waiting for to really decide whether I was going to look to buy or not. And it never got up into that because we have to let these things unfold, right? Especially after a gigantic run like this. You don't know if that was fake to liquidate and then go higher. It very well could have been. Okay. But that's how you want to kind of consider it. Let price get to a PD array. The previous day's high is a PD array in itself. Okay. But preferably if you're able to catch SMT at those highs, if your narrative is bearish, right? And it just makes sense that it's going to go lower. And it's a Tuesday as well, right? Wednesday sets the high, the low of the week, generally, high or the low of the week, especially in a situation like this. Monday rapidly went higher, right? We talked about that on Sunday, how it has a chance to go up. I would have preferred to see it stay in the lower portion, but again, this unfinished business. So it came up here, tag that, respect to it there. Now we're showing respect to it there as well on a closing basis potentially. So that really justifies this. This is what we want to see. I don't usually use SMT. I'm confused. Maybe I have to practice using it. Yeah, if that's the case, if like things like SMT are not fully locked into your abilities yet, I would hold off on trying to assume that you're going to be able to pick tops or be able to sell at the highs of the day or buy at the lows of the day. Work on the response first. Get the response down. Then once you master the response, which is like a breaker or some other PD array after the reaction from that level or any other level that you're studying, then later on, once you understand a little bit more, start to consider that next level, because that's like one of the highest levels of ICT execution, and it is the absolute hardest, right? In terms of turtle soup, there's a lot that goes into it. There's a depth of knowledge that's needed, and many times turtle soup shows up in the market maker model at the SMT or at the smart money reversal phase, which again, that smart money reversal phase only happens at PD arrays, which it could be any PD array, right? And that's fractal too. So if it's like a higher time frame smart money reversal, it's going to be like this scenario, right? For the 1 hour market maker sell model. But if it's a 30-minute market maker sell model, it may need to tag a 1 hour upper PD array, right? Like a 1 hour order block or a 1 hour fair value gap before that 30-minute smart money reversal can take place and present you with the turtle soup. And then, of course, that is assuming that it's in a bearish trend and the narrative is going higher to go lower, right? So you can imagine there's a reasonable amount of stuff. So depending on your experience level, if you have less than 3 years experience, it's definitely it's better, easier to just trade the response rather than the first initial tap, right? Or to assume that once it goes above that high, you can then execute. You got to practice that too over time. And eventually, if that's what your goal is, you'll get to it. But just remember, it's easier to get to profitability or consistency, I should say, not profitability. It's easier to get to consistency when you trade the response off of PD arrays rather than the first initial reaction, right? So don't let that be a sticking point for you. Let it be a study, let it be a goal, but I wouldn't focus too much on that because there's more than enough opportunity, like I constantly show you guys, to trade the response rather than that best of the best entry, right? So yeah, hopefully that is helpful. And again, another way to start getting better at understanding the previous day's highs and lows and learning how to trade the reactions to that, right? Or those initial tags, you got to study previous day's highs and lows. Get a shit ton of information about them, right? So many screenshots, like a nauseating amount of screenshots. Look at every single day that you spot the previous day's high being swept and look and see what else was in that area. What time did it take that high on the previous day, and what time did the reaction take place? Right? When did those things happen? That's data that you are required to get for all your models, right? For every scenario that you're trying to trade, but specifically for uh, studying the previous day's highs and lows when they get taken and the response off of them, how to trade them. You want to get in there and really, really cut your teeth on digging into them. That's what I did for all the concepts that I utilize, from breakers to market maker models to power three to time, right? Um, Weekly, daily ranges. I've had to hurt myself to learn risk management obsessively, right? Which is not required. You just take good advice, don't lose a lot of money. If you take a loss, stop. If you take a win, stop, right? That's another reason why you don't see me in here trying to find another trade. I took a beautiful trade that hit my daily goals, right? $400 is enough for me. I don't need much more than that. I really don't, right? So, could I get more? Yeah. Does it sting a little bit at times? Of course. It's going to always sting when you leave money on the table, but we're able to catch this stuff so often. And seeing it work, even if you didn't take a trade, goes back to what I just said about the daily highs and lows, right? Seeing it starts to make you get comfortable with it. And the next time, when the situation aligns, you're able to do a little bit more and then a little bit more and then a little bit more. And you'll get more familiar and more familiar. And then you'll wake up one day and think, wow, like I've came a long way. And you'll be able to do stuff that you couldn't even imagine, right? You'll find that some of the things that you wanted to do early on, like in some traders, they want to tag the highs and lows again, right? And it's like when they get wisdom and they see that they don't need that to be successful and it feels just as good to trade the response, sometimes they disregard that interest altogether. And it'll be different for all of you with this stuff, right? You'll gravitate more so to some things, less so to others over time. But you know, it's good to strive for perfection. It's good to strive for being able to catch things like this, because if you can't catch that, at least you'll get close. And close, as you can see, offers a tremendous amount as well. Okay. So yeah, and the SMT is just a Kraken correlation with coupled assets, right? It's as simple as that, right? So we see the highs up here on the NASDAQ, see the highs up here on the S&P, and then you see the highs in here for the Dow. That's S&T. That's a failure. They should all be making new highs. But because there's a failure there, that's a smart money indication the price is respecting that level and we're going to turn around. Same thing's true if it's at the lows, right? Like if it makes a failure swing in here, but then we see the S&P tags it, and then the Dow has a failure swing, right? Any Kraken correlation in there, if it's even one, it could be two. It doesn't matter which one it is, though, that gives a Kraken correlation. The fact of the matter is there's a Kraken correlation. So if it's at a level like at the lows in a PD array and you see S&T, it's most likely going to bounce and reach up a little bit further. And the same thing's true at the highs. If it's reaching into the highs, creating new highs, but then you see that one is failing and we're inside of a PD array, when you see that response, it's more likely that it's going to reach lower. It's a confluence. It's very helpful. And this is true even on the lower time frame. And sometimes there will be multiple SMTs happening at the same time. Well, when that's the case, to verify which one is more trustworthy, first of all, think about the narrative that's on the higher time frame. What direction is price going in and why? But then also use the bonds and yields relationship with the DXY. And of course, the bonds relationship with the assets like this. And then whatever that is telling you, that's the way you want to trade, right? With the SMT that supports those. Like say the dollar's going lower and you have a bullish SMT, right? for the indices. Well, if you have a bearish SMT as well, you're going to go with the bullish SMT because the dollar's going lower, the yields are going lower, the bonds are going higher. That supports bullishness. So the bearish SMT would be fake. And so that's how you kind of verify. Right? Sometimes it just whips both of them, right? And that's just part of the game. And it's just not going to be clear at that time. And you have to observe that. And then you just don't take a trade. Okay. You just put it on pause. Right? So again, hopefully Avinity, I'm able to help you in that regard. Maybe I'll talk about SMT a little bit more. I'll point it out more. Again, I do have an indicator that specifically is made to identify specific SMT. It's not perfect, obviously. It didn't grab that one because I'm assuming it's not a very obvious high. But I mean, maybe if we drop down, yeah, dropping down, you could see that it identified it. Just didn't identify it on the daily. So it did identify it. And again, this is a tool that's used obviously to help students learn. All the indicators that I have are used, well, the ones that I made are used to help traders learn both my model alongside some of the other different elements like time and S&T, um, standard deviations, right? The regular trading hours gap, new week opening gap, new day opening gap. It just plots it automatically so you could just see where it's at and then learn. And again, it's in my private group. So yeah, and when it comes to my private group, those of you that do think that what I do here is worthy of your time and you want to get closer with the community over there in the private group, or just be with me more on a daily basis, you can obviously go and check the details out on that. I do offer one-on-one capacity every quarter. I only accept like 20 people per quarter in that capacity. And first dibs always goes to the students that are in my private group as tier 1 who want to eventually become tier 2. And then of course, if those students are exhausted, if I don't have anyone from there, then of course I take anyone from YouTube, right? Or just anyone in the world, right? As long as you're serious. Because if you're not serious, even my YouTube channel is not a place for you. Like if you just want signals, I clearly give signals, but I make you think. I don't just say buy here, sell here, this is a stop, this is that, because I'm not licensed to give you trade advice. And I don't encourage you to take any of my trades. It's up to you to learn so you can do it on your own and take care of your family, not come here, depend on me solely for the rest of your life to make good trades. You want to learn how to do this, and that's what I'm here to help you do. So whether you're in the free group, whether you're in the private group, whether you're here on YouTube, that's the goal. But whatever you decide, you're going to get more value here than you do in most places, that's for sure, because we really know what's going on. Improve it. So yeah. So that being said, I think we've done a lot of work today. If you guys don't got any questions, I think that we will wrap it up. Absolutely spectacular banger start for this little marathon we got going on this week. Over 300 point move that was given real time. I secured about 75 points. Obviously could have held it for longer, but again, CPI week, day before CPI. I mean, just in general, if you can get over 60 points a day, 30, even just 30 points a day, and you manage risk properly, so your losing days don't eclipse, your winning days too much, you'll set yourself up for success, right? But if you can target 60 points a day, 2 losses won't even be able to eat up 1 trade many times. 30 is, it could be a little bit more tricky, but if you have velocity, you can find many setups, you can outpace it. But preferably you want 2 to 1, 30 point stop to 60 point gain, or at least, 40 point stop to 60 point gain. That's like the sweet spot. But again, if you're new, focus on 20 to 30 points You're literally just trying to get comfortable with the overall view, uh, and then watch it play out. If it runs more so than 20 to 30 points a lot of the time, then that's a green light for you to hold the trade longer. And you work yourself up from there. You work your way up. You don't just jump to 60, 100, or 100 points or even more overnight. You got to build your way up, get comfortable with the skill set, get comfortable with yourself, managing the ups and downs, managing risk, understanding what you're actually doing. Right. And then eventually, like I said earlier, you wake up and think, wow, I've come a long way. And I'm sure that all of you guys that do spend time here, if you don't think that way already, like look back and think, man, like this stuff makes sense. Right. Like way more than it did when I wasn't part of this community. If you don't think that yet, you will eventually. It always happens. It's just a matter of you being patient and showing up, you know, and then follow the rules, right? If you overtrade and over leverage, don't take more than 1 or 2 trades a day. And that may mean you may miss a bunch of setups, right? You may take trades, lose early on because you're rushing or whatever, but that's an opportunity to fix the problems and build good habits, right? You may get a bunch of trades wrong in the morning or shoot your 2 bullets in the morning before the macro, but then after the macro it works out over and over and over again. And as long as you are building the discipline to take 1 to 2 trades a day, that now highlights an exact obvious problem. You're trading too soon. You're not letting the trade develop yet. Because if you're correct after the losses take place and you identify when you're taking the losses, whether it's pre-market or that first 30 minutes, many times it gets smoother after that first 30 minutes, just like we see here, right? The first 30 minutes went against what it overall did. So it manipulated. And then once you get to 7 o'clock, look at how beautiful that is. It's just beautiful. This happens so often after that first 30 minutes. It takes a lot of experience to trade pre-market open. It takes a lot of experience to trade right at the open, to navigate that manipulation. It's manipulation. If you don't understand manipulation, because you haven't done it long enough, I mean, it's very obvious why people get blown out. And if you overtrade and over leverage, aside from everything else, that is the clearest sign why you're blowing out, not able to do anything properly. Because everything else will be dragged down by your bad habits of overtrading and over leveraging. Okay. So again, keep these things in mind. I hope you guys got value from today. I'm gonna let you guys go now. Thank you guys for the love and support over the last couple of months. I'm grateful to have you guys here. I know there's bigger channels and more entertaining people, but I don't think there's anyone that matches the value that's here. You know, when you're able to stick around and just be patient with it, watch and listen to what's being talked about. This is how the market operates. I've spent almost a decade, going on 7 years this year in August, studying this, hurting myself, you know, and then also teaching other people as well for the last 4 years, you know. So I've been able to gather a lot of experience, a lot, not only in my own, but also how to help students overcome their own issues, let alone my own studies from the charter group. And then also, um, you know, my friends that are in the charter group who share a lot of things, the content from the charter group, and then just trial and error, right? And having homies like my friend Byron, right? He's been with me from the start. Having friends like that that you could bounce ideas off of and confide in if you have struggles, share wisdom with each other. I think that's a huge benefit too. So that's another layer. And then my mentors too, outside of ICT. The tens of thousands of hours that I've poured into this. So you're able to benefit from all that stuff that I've put in. So I'm trying to, pour it into you as well. Pass that blessing forward. So yeah, and that's why there's not more value in most places versus this community. So hopefully you guys feel the same. Again, I'll let you guys go. If we didn't take a trade in here, again, we're going into the macro. So, this could have been another opportunity potentially reaching for that low. But this is another change in state. So before we go, whenever someone's wondering, like, okay, well, this is a sell side move, prices retracing back. How do I know when the trend is back in line? Well, this whole move up is counter trend move, reaching for a PD array if this is going to continue to go lower. Okay, reaching for a premium as well. Okay. The way that you truly determine that it's time to get in line with the narrative, you need that change in state from a larger time frame than the entry time frame you're using. So this breaking down below this, this is also my momentum order block if this closes below that. Those of you in the private group know about that. But this change in state of delivery in here on the 16-hour chart or the 8-hour chart or the 4-hour chart or the daily chart, wherever you see that taking place after a retracement into a larger time frame level off the heels of this displacement, right? If you're anticipating when it's going to start getting back in line with the narrative, this is what you want to see. Because now anything beyond this low has a very strong high probability chance to get down below here. And you're going to have a less of an issue trying to get involved with the narrative than you would if you're trying to just pick the top in this, right? Or just, try to force this to turn around, right? And take shorts too early before this type of move. Obviously, we built in different ideas to allow for us to have engaged this, to know when it was going to begin. But again, the 7 years experience, okay? For new students, you want to observe this as well. You want to observe this because this will get you familiar with, okay, that's when it can, on a conservative basis, be more so ready to go lower than it would be for a new student to try to short up here without someone helping them like me, right? Doing it publicly like we did today. Okay, so that's something I want to leave you guys with. So we know for a fact that this has now started the move. This is the high of the week. So now anything from today on to tomorrow through the next day, I think CPI, if we don't get down into this, if it comes down, it pauses, CPI will be used to take this out, right? Again, we've had this outlined as a target for a while now. Right, there's that liquidity there. Still closing inside that breaker zone. It pushed it to the limit, right? I would have preferred to see it respect this lower portion. But this whole entire range, as you go up in time frame, that whole down movement is the breaker range. And we could see that it hasn't broken outside of it. Okay. And now that we're below it, it should be sensitive. You could break this breaker down into quadrants, get pretty accurate levels that can be, man, this thing is on a rampage, huh? This is a beautiful response from a higher time frame level, by the way. This is why you want to wait to be a part of higher time frame levels. Damn, Maddie, did you hold the trade? 500 points? Jen, did you hold too? I hope you did hold. I hope those of you that got in did hold. I just have rules, right? So following them up to this point serves me well. And this isn't the first time this has happened. It won't be the last. Okay. But yeah, spectacular morning. So again, I hope you guys have gotten value. We're going to pay attention to this. Again, we have our level down here that we were looking at. It's that regular trading hours gap I told you guys about, remember? The regular trading hours gap from here. Remember I told you guys from yesterday it's widely available, so it's going to drop, it's going to get down there. We have relative equal lows here, justified with this also being a market maker model if we get that response up here. Broke down, and it's just everything that we've talked about. It's off to the races. Yeah, no, Jen, it's okay. That's a beautiful, beautiful execution. Look at that. To 49, you exited right there. I'm assuming, right? Below that. That's a beautiful target. Nothing to be upset about. Look at this too. You guys remember when I outlined this? I said if this gets traded through, it should treat it as accumulation turned to resistance for a market maker sell model. And what do you know? That offered another opportunity from something we talked about earlier. It's just flawless. Beautiful, 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 beautiful. So again, hopefully everything made sense. God bless you guys. Whoops. Uh, Hopefully you guys got value. If you did get value, don't forget to like the video, subscribe to the channel. If you guys think that what we do here can help anyone that you know, definitely spread the word. Word of mouth is awesome rather than like random people showing up, but there's nothing wrong with that either. I think it's more of a tight knit family. People are more comfortable when everyone is kind of familiar with each other. It's kind of how my private group has come along. Everyone told someone who knew someone who told someone, um, and it's just made the community pretty tight knit. So if we can get this community to be that way as well, I would like that. But yeah. So with that being said, again, God bless you guys. What a spectacular morning. We'll be back to do the same thing tomorrow. We'll see what happens though, because it's a large range day today. So coming off of a large range day, the next day can end up becoming a little problematic. It's a little different because we have CPI. So that's going to obviously spin up a lot of dust, right? Things are going to go flying everywhere. I'm assuming that this is the response that's going to lead us down into this. We also, on this daily chart, have now created a rejection block. So the only way that I'll be looking to try to see this go up or be bullish in any capacity is if we get beyond that rejection block. But I think that this market maker sell model is going to be something that we can trust and believe in. Okay. And again, the rest of this gap, this regular trading hours gap, is in the crosshairs. Jen, like I told you earlier as well, we pointed out this extension level. Look at that. We should potentially see a retracement from this 2.5 standard deviation from this high to that low, projecting. Beautiful run to that target. And a full target is right below that low. Okay. So yeah, we'll leave it there. Again, God bless y'all. Don't forget to like the video. And I will catch you beautiful people bright and early tomorrow. Same time, 5:20, just so we can have some time to get to questions and whatnot. Oh, wait a minute. Uh, Probably going to adjust that to 5 a.m. actually. Give us 30 minutes to lay everything out and then maybe answer some questions. Okay. So yeah, we'll be back again tomorrow at 5 a.m. Okay. So yeah, God bless you guys. And I'll catch you beautiful people in the next one.